Buys are kind of up at that resistance we talked about in yesterday's morning meeting. At 247.40. So the pre-market high on Thursday was at the half. Actually, that's when I shorted that on Thursday in the pre-market. So let's watch this area here. Maybe first time it actually pulls back closer to 247. And we'll watch for the breakout there. But any type of strong move above 50 cents, hold above, you don't really want to be short until you see a failure and it come back down below 40 cents. I'm a little bit skeptical. I mean, let's see here. July 11th. I guess it's 2 weeks. It went up 2 weeks later. It's consolidated for a few days. Yeah, I guess it could break out and maybe make a run up closer to 250. We've got 2% above the prior high here. It's not that much on percentage terms. On IWM, above 143. So we tested 42 late morning yesterday, ripped up to the close. And now we are testing Thursday's high, which is 143.5. So use 143.5 and 142.85 points to see if the market turns at those prices. And Q's is going to be down a little bit with Google being down 2%. And so Google is market cap. It's probably right after Amazon and Apple, probably third, right? The Q's. So it's a big component. It should impact that today. So focus. I'd be more focused on the SPYs. All right. So a bunch of big names reported. Caterpillar. Here's the daily on Caterpillar. Yeah, actually, the numbers were, I mean, they were absurdly good. They raised guidance. So this thing had topped back years ago. So after it had a huge bounce from the bottom during the financial crisis, it went from 25 to 116. They crushed it, it came back, it tested that again, and then it moved sideways for a few years before breaking below 80. Back. Okay, so this is back around market crash time, August of 2015. And just right back up at the high. So,
A little more than 30 minutes.
really impressive. So we made this run here from 103 recently to 110. It's about 20%. It's up about 20% this year, which it's a good amount for a large blue chip stock. So I mean, that's really the only reason on the numbers they reported you wouldn't be looking for it to trade back up to the all-time high. There's kind of an up channel that it had before kind of people sold it actually ahead of earnings. And then the place where you got to be careful is this is going to be different than like a Netflix or Tesla after they report monster numbers. When those guys report monster numbers, a lot of times the momentum players will step in and just buy at a gap and hold it up here. It's with blue chip stocks, the institutions are more likely not to chase. And so that's why sometimes even with really great numbers and guidance, you'll get, even at the full gap fill, but you'll get some profit taking. You always get profit taking no matter, even on Tesla or Amazon or Netflix, but the issue is momentum guys will step in at higher prices and hold it up there. So in this case, we know the all-time high is up here kind of off the chart. We know that it topped out here at 114. double topped here. And so is it gonna, is this gonna hold here? Is it gonna make another lower high, let's call it 113.50, then break below 113 and you'll get your pull-in 112, 111. It's always possible in these situations you could get a gap fill because the more people take profits, the more people start selling. You need institutions to absorb that. As I said, institutions, they're careful about chasing non-momentum type stocks. Having said that, we can judge it based on the price action. After 10, 10:30, if this thing is still above 112 and starts to hold above 113, you can play it for a move to close at the high of the day. Next one is STX, and this one is just a nightmare. The numbers are really bad. Their CEO's out. Here's the daily. I think I remember when this thing started to bounce last year from 20 and gapped up 27 and strong. And I remember thinking when it got back up to 36, 37 and a half, that was a lot. Maybe it would fail there. It did fail like $1 higher, rolled over, but it just kept on up on this up channel and got to 50. By the time I got to 50, I don't remember if I gave up on the short side, but it finally gapped down here in the last quarter. And I don't know what the notes, you could probably go on the calendar and see what we had there, but basically it was gapping down to the support, and below the support there was nothing until 42, and below that you had your gap fill to 40, which it did a couple months later. Now it's gapping down again to this area here. It's now erased more than half of the move from 20 to 50. And below 32, it's 30. All right, so initial flush move. Maybe it did actually print down here. Who knows? This was earlier, closer to 30. Buyer stepped in at 32.80, but now it's holding below that. So what do I have on the sheet here? So below 32.50 is 31.30. And then we have for, okay. So potential bounce areas up here. So again, if you're going to play it on the short side for the move down to 31.30, it's hard to imagine it getting to 30 today, but it's possible. Anything's possible, right? They did miss by 30%. Some of that had to be factored in, right? Because it already came off from 50 down to the mid 30s. Failure, let's say closer to 33, then starts to hold below 32.80. You can play for the pre-market low. And then you can kind of see if it continues to roll down to that 31.30 support. That would kind of be my play on the downside. I wouldn't be sticking with it for a move to 30 unless it got incredibly tight and it had very low risk and had a clear break down in the 31.50 area, got below that 31.30. The next one is MCD. Again, it can bounce. It can flush through 32, then the buyer step in, gets above 32.50, and you can play for bounce to this area right here. It's down enough. Again, it's down $7.5 right now. Next one is McDonald's, MCD, which they had a solid beat. Not as strong as Caterpillar. This one is at the all-time high right now. Here's the daily. So let's go back to January to see how much it's up this year. It's up from 120 to 156. So you can do the math. It's actually almost exactly 30%. That would be 30% right here. So that's a lot for McDonald's. And again, the reason why we keep on doing this, I think I've explained this before, is but we want to see how much it's up this year because we understand what the profit incentive is for people to take profits. So if blue chip stocks are up, more than 20% for the year, mid-year, they report good numbers and then it gaps up, that's an opportunity to sell for some people who would like to buy back cheaper. And that's most stocks, 95% of stocks that aren't momentum stocks. Probably more like 98% of stocks. Okay, so here's the top out. Here's the all-time high. It rolled from there down to 52 a couple of times, where it supported here and here. If it rolls today, meaning it fails here, we're looking at 53.5, 54, this area right here. I think first spot you'd want to look for a little support. It's 54.75. This area right here. So what does that look like? Comes up, tests the all-time high in the pre-market, maybe even overshoots, goes to 57, starts to hold below 56.50, hold below 56, and you play for a move to here, and cover a bunch, and then you see how if it rolls any further and maintains the downtrend. Kors. So Kors was buying this Jimmy Choo's, which is I think a shoemaker, high-end shoemaker. The market seemed to like it earlier in the morning. Was up at 36. If the selling that started earlier in the pre-market continues, you have very clear support here at 34.70-ish in the last 3 days. You could look to buy it into a flush into this area here with a stop below the half. See how much it's run up. 33. Yeah, it's up 10% in the last couple of weeks, so let's see why people might want to sell into a gap up. Hasbro, HAS. So I'm still long a little bit from 104. I think somebody said something positive today. We talked about this initially as a short in the morning meeting yesterday, just because I don't remember what I said, but probably had something to do with the amount that it's run up. And into the 112 area, shorted 108.50 support. It blew through that, tried to bounce from 106, went up about $1.50 before continuing its downtrend. I noticed it was kind of being bought in the 104 area. Didn't really bounce much from there. I guess at the end of the day, it did bounce $1.50. It's gapping up a little bit more this morning. The way I look at something that's down this much is it gaps up. Maybe they flush it first back down to 105. It makes a higher low here. 104.60 to 105, and then I play it for a move back up to 107.30 to 108, something like that. Halliburton. So this one, tried to buy into this, got a little bit of a bounce, sold it, flipped it short, but gave up on the short. Didn't play for the move below 42.50. It did go almost down to 42. End of the day, they popped it to 42.5. I shorted a little bit there right at the close. Up 30 cents in the pre-market. Watch for a failure at 43 again here and see how much it rolls over. If it comes back down, it can't get below 42.50. Maybe this is the bottom and it starts to bounce. 43.30 and 44. That's it. So, as always, be patient and good luck.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.